Welcome to the Hurley Investments Market View commentary for the 24th of January 2022. We're actually doing this on the 25th. My recording yesterday did not go correctly. It was jumbled up. I made a mistake. I'm not sure what it did, but I am re-recording what I tried to tell you yesterday for today. Here with me out in the Las Vegas area is Scott Smith and Todd Sinks. It also looks like David Westlake, David W, is here with me today. I kind of told him I was doing this tonight. So David, if you have any questions, you're going to be my question and answers. I am just getting this recorded so you guys will be able to listen to it Wednesday the 26th. A lot of people asked on Monday, what a day, so what happened? And I'm going to just spend a little bit of time going through what brought me out to Las Vegas and what's happening with my daughter, and I'm going to relate it to our stock market. At least I'm going to try to relate it to our stock market. As of recently, my daughter ran into COVID. She broke her foot. She tore her MCL. She was basically out of her gymnastics for at least a year and a half, closer to almost 2 years. She ended up coming down to Vegas to compete. Vegas holds one of the big 6 tournaments out of the, hundreds of tournaments all across the United States. And my daughter, on her first meet back to see where she was going to be, to see how she was going to do, she ended up taking first place for her age bracket and her skill level. Put her back on the junior Olympic track to possibly get out to the Olympics in 2024 in Paris. And as we were speaking afterwards, the comment was made, what a day. And I was like, Jordan, what happened? And for being just a little 12-year-old amazing girl, she basically ended up telling me, how did she say it? She said, basically she said, God placed, I wrote it down, God placed the best things in life on the other side of fear and adversity. And for a 12-year-old girl to realize that sometimes we have to go through some hard times or some difficult times was shocking. And again, there's sometimes I look at my little girl and she's just an old soul. For her to realize God will place some of the best things in life on the other side of fear and adversity, after you've had to work for it and accomplish something, it was really eye-opening for me, because I believe that also goes through our stock market crashes. The best things that we do at Hurley Investments, especially when I talk about, Hurley Investments, I'm just going to put methodology, right? Methodology is nothing more than, first, we protect stock ownership during the most volatile times when stocks can lose on average 15% of their value. We primarily do this around earnings, but also as our market moves up and down like we have been through the last, in January, market's already down here in January. If you give me a second, I'm going to pull it up. Market is down. Markets, S&P 500, it's got to be 9%. It's got to be 8.6% year to date. Our markets are down. So you've noticed we've tried to put protection on. In fact, I will go out here to say most, if not all, stock positions are protected. With that said, yes, we understand what a horrible time to move accounts over right now. The transition to Schwab has been horrifically longer than expected. I understand that. It's really ridiculous. They're bureaucratic. Things have really changed. The good news is a lot of things have already gotten called away, where some of you are really cash heavy, and we just have to put some of that to work. If I can go ahead and make the comment, or actually give the credit to Rich Mormon, he asked the question, why haven't you cashed in the protection to add more shares? And really, as I sat there, I was like, great question. And number one, it starts with looking at the charts. This was yesterday. Today, our charts are even worse. But yesterday, our Dow Jones came very close to 33,000. And it gained it all back on the low side. When you have a downward trend like this, I would not take protection off of stock ownership. But Kevin, Bank of America had great earnings, and it went up, 26 cents on the day when it was up $1.50, came down. We kept your protection on Bank of America because that stock, or any stock, can't beat the S&P 500, can't beat the indexes. The indexes are bearish right now. I can't take protection on or off and then just, buy 100 shares and throw it back on. I lose that benefit of having the protection making up a lot of the downward movement. If I was to go ahead, I'm just going to put the same arrow there. Let me bring the S&P 500 in. There's the S&P 500 that almost went down and touched 4,200. That same downward movement. It's not my job to guess, hey, I think we're at a bottom. I think we're at a bottom. I'm going to take it off. I really would think the S&P would have to close closer to 4278 and give me a bit of a bounce higher before I'm going to take protection off, cash it in, add another 100 shares, and then add more shares onto it. In fact, if I can go ahead, I'm going to bring a quick explanation here. Pretty good. The market is down 1.22. We're down 0.5% today. On $16 million, let's do the math here. On $16 million, $16 million. Let me find the calculator. On 16 million, and it's really I'm just going to say 16,100. 16,100,000 times 0.0122. We should be down $196,000 at the close of today's market. $196,000 if we were following the market. We're only down 65. Reasons why? Well, let's find Under Armour. Under Armour. Day change. Come on, Hurley. There's our day change. It was down 1%. 5. Well, that's how much of the portfolio. Not important. So we're going to say day change is $35,000. But for Under Armour, we've got puts that are here making money. Let's do a different one. Bank of America. Bank of America was up $27,000. Let's do Apple. Apple was down $36,000 today. Excuse me. So $36,000 down on Apple. But if you take a look, we've got some puts that are in place. We've got $175 puts for some people, 81 that are making up $14,000 of the 36 that were down. We've got Apple puts at 170 that are making up $13,515. So right there, we've got $27,800, $27,800 we are making up on Apple that's down 36. If we're to reset that, instead of making up 66%, I would probably only be making up 45 to 50%. So we're keeping those positions on. There's Under Armour. We have those. More Apple puts in here. Another 1,000, 1,600. So actually, we're at 30,400 of the 36,000 we made up. That's why we're doing what we're doing. That's why we're using that protection to make up some of that downward movement. Facebook is another one that was down good. Where's our major Facebook protection? 13,000 right there. We have some more Facebook, 1,200, 16 and 1,800, 34, 40, 46 to 4,700 on top of this. So 17,700 was made up today on Facebook that is down 23. We're not going to take that protection off to reset that and put it at a lower dollar figure. It's just not what we're looking to do. We're looking to protect these positions and let them really make a significant amount of money. That's what we're trying to do. We really, right now, we're looking for a 20% correction. We're looking for things to fall down like there's no tomorrow, so we can keep making up more and more and more of that downward movement. So first and the easiest, I'm going to put first that way. First, we try to protect stock ownership during downward movements. Second, we dollar cost average without asking you for more money to make more as the market recovers. That is really what we're doing. That's what we're doing, is by taking those profits, we're trying to do everything we can to add shares so that when it really takes off, you're going to be sitting nicely on the upside. And third, most important, we are always watching so you don't have to. Why? I get this question all the time. Why are you always watching? You're out in Vegas. How are you always watching? We're always watching because our money is in the exact same positions as your money is in. That doesn't make a whole lot of sense. Our money is the exact same positions that we have your money in. That's why we're always watching, because just like you, our positions are there. That's what we're trying to see. That's what we're watching, and that's where we're spending our time. Really, in all honesty, managing your money exactly the same way that we manage our money. We want to know what it's doing because we're there. I think it's kind of funny because I heard this here as of recently, and it was one of my boys trying to understand, Dad, can I do what you're doing? And I think when it comes to the stock market, not only do you have to have a proven methodology, but I heard this quote, and I'm not sure who it's from, so I do apologize because I can't tell you where I heard it from or who said it. But without commitment, you will never start. But without consistency, you will never finish. And I found that pretty interesting because I think that relates to the market. Right now, we're excited to see the market tumble. We're excited to see things fall. We have an opportunity just like we had in 2000 where we had a 43 upwards to a 68% return, except for those portfolios that were overloaded in Boeing or that had Boeing in it. Boeing has not come back. We had a big drop, picked up shares, ran it back up. Boeing has not participated in the recovery. Everyone that was not in Boeing shares had a really good year in 2000. It looks like we're starting off 2022 exactly the same way. I'm going to go through the concerns, but let me go through the big picture because I thought the big picture was pretty interesting. It really starts off the potential for negative surprises inflated like wages. 2022 has not gotten off to a good start. NASDAQ has suffered a correction, was loosely defined between a 5 and a 10% pullback. The Russell 2000 is flirted with bear market, and as of today, it is down 20%. So the small caps, the Russell 2000, it's sucking it. It's doing absolutely awful. There's been no rush to buy the dip. And I think that comes down to three different reasons right now. Inflation, rate hikes, and the fear of Russia invading Ukraine. And obviously, there's nothing that Biden has said other than, yes, I think they're going to do it, so we're going to throw some more tariffs on them. And in real life, we should probably be sending troops there. And out of all the countries that can send troops that are, pardon me, I'm going to say this, the best badass troops, it should be the United States sending them out there. If we want to make sure that Russia doesn't invade Ukraine, that should be the number one thing that we end up doing. It'll be interesting tomorrow. Tomorrow's Wednesday. We haven't taken any protection off because we want to hear what the Fed says. But I found it pretty interesting what it all means. The fourth quarter earnings reporting period is about to go throttle up. There have been some warning signs that even though we had great consumer spending, a pretty good Christmas, GDP is higher, that we are having some companies that are just not growing like they're supposed to. It doesn't make sense. We have some things that are at odds, right? We have a rip-roaring economy, statistically speaking. Statistically, our GDP is pretty darn good. In fact, for this next quarter, GDP comes out for the previous quarter. GDP comes out on Thursday. We're expecting a 5.6% growth. 5.6%. But durable goods are supposed to be down 0.5%. Durable goods ex transportation is supposed to be down, or supposed to be up 0.4. We're not seeing the GDP numbers because the GDP numbers are past, right? We're not seeing the forward growth that we're looking for in our economy. With that said, I was shocked. Consumer confidence was supposed to be at 112. Today, consumer confidence came in at 113.8. I have no idea who the hell they're talking to. They're so excited about the economy and their job, that have confidence in buying homes at all-time highs, that are going to look to buy more products with higher interest rates and paying a higher interest. Now, it could be 4 rate hikes. It'll probably only be 2 rate hikes for the year. But really, will 1% in interest really make or break your decisions to purchase something? It shouldn't make or break your decision to purchase a house. The problem with housing markets right now, golly, I've never seen home prices so high. Is it going to make or break you that, to buy a used car, a new car, a used car you might pay what, 6% instead of 5% interest on it right now? A new car, instead of getting 1.5%, 2% interest on it, you're going to pay 3%? Are you really going to not buy a car because of 1 percentage point of interest has gone up? Probably not. Probably not, but that's where we're sitting at right now. That's where we're looking at. We still have got bottlenecks in supply and demand, and we have some people that are really worried. Market recap. Please feel free to read this. Again, it's pretty much what I just told you. Where all markets end this week, I'm just going with the belief the trend is your friend, and we're going to go lower. With that said, we have hit on the Dow the oversold. We're even oversold if we take a peek at the Williams percent R. And the Williams percent R is nothing more than, well, actually we just came off of it, but it's where big money is putting their money. We are definitely oversold and expecting a little bit of a bounce, but it's probably a dead cat bounce. In fact, if I go to our charts, let me use the more recent ones for Tuesday. As I said, those charts were yesterday's, and I'm sorry, I just, for whatever reason, didn't get that recording for you. Technical errors. There we go. Another down day. Nice to see it recover. We're technically building a base off of the December, October, and September lows. Could be a quadruple bottom. We need a couple days to wait and see to see if that's correct. If I pull up the S&P, it also will show that we're bearish. The SPX is the ticker symbol for the S&P 500. Taking a look at the RSI, we are definitely oversold. We are definitely trying to see big money come in. It's nice to see that there was some buying power. But once again, we're trying to build a base at this 43.50 range. Really, it kind of puts us right in here. Here is a nice triple bottom, short-term cup and handle, and we took off. But boy, testing some lows over the last 6 months. And the NASDAQ just looks awful. NASDAQ is obviously bearish. When I look for that, I'm using the ticker symbol, the dollar sign, and I'm looking at the NASDAQ composite. Look at that. We are really past our lows. Lowest it's been in 6 months, oversold. I would probably bring this out to a year to see if we're testing yearly lows. Taking a quick peek at our yearly low chart, 1394 comes into that 1302 in May. We do have 12,786 and a yearly low of 12,397. So it wouldn't surprise me to see us lose another 600-700 points to test those March lows. Good to see we're stopping. Good to see that we seem to be doing a bit of a bounce. But in all realistically, 13,539, go down to the 12,400. We've got 1,100 points to the downside that we could be seeing pretty easily on the NASDAQ. Some people have asked, why is the NASDAQ getting hit so badly, right? Why is the NASDAQ just getting crushed? And the shortest answer is a lot of people are worried about those interest rates. A lot of the high flyers for their valuations don't make sense. Tesla doesn't make sense. NVIDIA doesn't make sense. Let's face it, there are some overpriced stocks that need a serious correction. 16,212 is the high. 13,855. So we have over a 10% correction in the NASDAQ. Probably needs to go to bear market territory, being down 20%, losing again another, what, 1,100 or so? Actually, it's 12,400, so we need to lose, yeah, another 1,450 points. All right, what do I got for you? I'm changing my prediction. S&P is down 8.6 right now on Tuesday the 25th. I'm thinking that we'll end up January down 5%. I do think we'll get some kind of bounce through earnings. Our earnings, we're only into Tuesday. Pretty nice to see Zions Bank. They had a pretty good earnings run. Zions Bank actually did very well for its earnings, and it was nice to see that it was up a little bit. If I go and I pull up, let's see here. Let me go to some of my stocks I'm looking at. If I pull up IBM, its earnings were pretty good. It was up 5.65%. So we do have stocks that have upside opportunity. Today, Lockheed Martin posted $7.47 on expected $7.14. In fact, I should just go to briefing so you can see the earnings. Let's start with American Express. American Express, love it. 2.18. Consensus was 1.83. Beat to the upside, surprised by 35 cents. Revenue also beat top and bottom line. We saw American Express up today. Pretty good to see that. I enjoyed it. Johnson & Johnson didn't do so well today, only beat by a penny. Not really beneficial. Verizon did pretty well, beat by 4 cents. The revenue, though, bottom line, did not beat. Nice to see that they had more consumers joining in. Lockheed Martin, surprised by 33 cents. Bottom line also beat by 100 million-ish. Pretty good to see. Verizon 134, 34,100. That's Xerox. I'm sorry, Verizon did beat. Verizon beat by 3 cents. Top and bottom line beat, and their numbers were better for subscribers. So when I look at American Express beat, I think we'll do better on Visa. When I see Verizon beat, I think Apple will do better. When I look at Lockheed Martin beat, that's going to give me some strength for Boeing that reports tomorrow. Those are the things that I'm looking at throughout the day to make sure we're in the stock positions that we want to be in. Tomorrow, Abbott Labs comes in, AT&T, Freeport-McMoRan, Goodyear, Hess, Kimberly-Clark, Intel, Las Vegas Sands, Tesla, Boeing. I'm ready to see Tesla get its butt kicked. Well, Kevin, Tesla already has got its butt kicked. There's more. There's more Tesla pain to come. It's back down to 921 after being up to 1100. I really hope to see it down around 750 after its earnings. It deserves it. Tesla doesn't deserve to be where it's at. Way overpriced, ridiculous multiple, a price to earnings of 298. Outrageous. It's garbage. It's garbage. Everyone knows it. They should all know it. Boeing will be one I'll be paying attention to tomorrow. Thursday, Alaska Airlines, Mosaic, International Paper, MasterCard. I pay attention to MasterCard because of Visa, just like I do American Express. McDonald's, Murphy Oil, Newcorp, Love is Southwest Airlines, Valero, Beazer Homes, Juniper, WD-40, Apple, and Visa. Big ones on Thursday, pay attention to. Autolife, Caterpillar, Chevron, Clorox, Phillips 66, and BF Corp are on Friday. The big decision, FOMC rate decision tomorrow. They should not be raising interest rates. You have the ability to sit back and not worry about it. But it'll be interesting to see. We might get a relief rally tomorrow that won't happen until 2:15 Eastern Standard Time, as we see no interest rate. I would like to see the Fed language be a little more dovish than hawkish, but we have to see. All right, some interesting articles for you. Very interesting article on double down on defense stocks because stocks will plunge another 10%. Morgan Stanley Mike Wilson warns. This again came out on Monday. It was after our market recovered, but he still thinks that it was just the dead cat bounce. Things will continue to drop. If you want to see Morgan Stanley's understanding of the stock market and why he thinks he should stick you in a bunch of mutual funds, even though it's going to lose another 10%, this is your reason why. Please feel free to read through how this joker still is pushing people into mutual funds, even though we're looking at another 10% drop. Very interesting article. Here's why stocks are on such shaky ground to start January. Please read through this article. This article really talks about the weakness that our markets are running into right now. It really comes down to tightening yet again. Text for valuation. Again, that shouldn't involve Apple, though. You got to take a look and read through this. Good. I guess it's not good to see, but boy, talk about all this cryptocurrency. It travels in tandem just like the stock market. Stock market's down, cryptocurrency is down. Please don't think that it is protection in a down market. If you had thrown all your money into basically Bitcoin, you just lost 50%. Our stock market is down 10%. That's all you need to know on where you should have your money, right there. Very speculative, definitely not fundamentally sound. Abraham wanted me to look on Mercado Libre. Very interesting corporation. I'm doing my due diligence on it. I will introduce it to you here soon. I'm not sure if it's one that we should be in because it's so big, but when a stock's going up because it purchases cryptocurrency, kind of like Tesla, Tesla's numbers are going to suck. They have, what, billions of dollars of cryptocurrency that just lost half its value. Just wait till their next earnings and they lose half their value because payments in cryptocurrencies are also losing half its value. Really stupid. That should be converted into cash pretty quickly. Jeremy Grantham doubles down on his crash call and says instead of the market losing 45%, he thinks it's 50. He favors overseas markets. I think it was last week I did emerging markets and some of the other markets like Europe. He believes you're a better place to have your money in, keep it in cash commodities and gold. If you notice, gold and silver has also sucked and lost their 10%. So again, we have another genius here trying to outguess the stock market. Not the smartest thing to do. Dow futures rise and stock market shows new mercy. Fed meeting leads 5 big catalysts. Really important to pay attention to. And Microsoft did beat and is up after hours. But we have some big companies, some bellwethers, Apple, Microsoft, Caterpillar, Tesla, you should pay attention to. Coronavirus, stock market correction, which is a cyclical, happens all the time. Love some of the big ETFs that have plummeted. IBD Innovator, 11.4% in a week. I can't believe people are putting their money into these absolutely ridiculous ETFs. They are getting hit harder than the stock market. There's nothing special. It's just gathering a bunch of stocks together, and you have a stock picker that thinks he's smarter than everyone else. That's why we use protection. 5 signals that tell you when the correction is over. I got this one from Bill Brandner. I really thought it was interesting. I went out and I found where it was at, but an interesting article. I would really suggest you spend your time going through it. It's kind of funny they have the picture there, but in fact, I'm going to take that out. Just bought it in here. Let me get this ready for you and prep the way it should be. I do want to go over it with you. All right. Where are they? Number one, if the correction is over, a more dovish Fed, which would likely lower the 10-year inflation and protect security yield, has been pressuring growth. That's unlikely since the market's gonna get the first rate hike. But number one, when is it over? When is the sell-off over? When you have the Fed starting to talk a little more dovish on their view of the market, right? Definitely pay attention to it. Number two, U.S. Purchasing Managers Index for manufacturing must bottom and start to come back up. They always go through the purchasing managers for manufacturing. If you want to see a robust stock market, you're seeing the purchasing power in our big companies. Number three, money supply. Money held by the public must bottom. This is unlikely until China's currency weakens. China is 37% of global money supply in dollar terms, and a weaker Chinese yen would send the dollar up, and growth in global money, I got to remove that, global money supply in dollar terms, tightening U.S. financial conditions and lower the PE ratios. It's all the technical evaluations here that they're expecting to see the money flow increase. For the S&P quarterly earnings per share beats the expectations. And number five, I thought was pretty interesting as well. The geopolitical mess to the east must be settled without hurting U.S. consumers. And again, we're talking about Ukraine and Russia. That just has to be dealt with. Guys, things are volatile. We're going to keep protection on until we find a market bottom. David, if you have any questions, give me a quick answer. But the long and short is we're making up 60 or more percent of the downward movement. We've made up over half of the downward movement of the S&P right now. We're in good shape. Kevin, what are we going to do if things keep falling? Well, Bank of America is pretty close to crossing another crossover level of 32. We'll add a second set of puts. So we'll start to make more money on the way down than the stock is losing. Kevin, what if it bounces up higher? We'll sell off our higher protection for a big profit. We'll keep the lower ones on until we see a turn in a correction and things are starting to head back higher. Guys, I know the stock market is scary. Thank goodness we protect. And again, if I can just use what my daughter told me one more time, God places the best things in life on the other side of fear and adversity. I could go so far as to say the profits we see in the stock market fall on the other side of the fear, adversity, correction, and downturn of the market. We make up some of that downward movement. We add it to new shares. We now have more shares that are making more money on the way up. That's what we do. We're always watching so you don't have to. Guys, thank you for putting up with a late webinar. I will have this up so you'll be able to view it on Wednesday. Love and appreciate you guys. Take care, and until next week, be safe. Bye-bye.